Okay, welcome to Strategy, Governance, and Leadership, paper 14. Today we want to look at strategy management, which is our first topic. And under here, we want to understand what is strategic management as a concept, what is its scope, framework, and then nature, and then we shall jump into the strategic management process. So it's very important for us to first understand what is strategy. What is strategy, but also what is strategic management? As earlier explained, said that strategic management is looking at a long term, looking at the future. And usually for organizations, strategy is mainly developed by people at the top level, the board of directors, the senior executives, because that is the strategic management. You know, we have different levels of management. We have operations management, we have tactical management, and then we have strategic management. So at the top, their intention is mainly to make decisions that will impact the business in the long term. And when you look at some of these strategic documents, what we call the strategic plans, these will be like 5 years plan, 10 years plan, and so on. So strategic management is giving a direction, because we want to attain a given strategy, but we cannot attain it unless we do certain things. So that's how strategic management comes in. So in terms of strategy, strategy is wholesome. It tackles the organization, the whole organization. And it may tackle aspects of products in terms of, let's say we want to introduce a new product in the market. It will tackle aspects of location. Maybe we want to enter a new location, or we want to alternate our structure, like our organization structure, or we want to recruit more staff to help us in achieving the strategy, or we want to allocate any other resources that the business might have. So that's very important when it comes to aspect of strategic management. And it's very important that these decisions are made, and they are made in a much proper way. And that's why we have the key strategic management process. So we have this scholar called Ansoff, who gives us, again, another approach to strategic management. For him, he sees it as a systematic approach to measure an increasingly important responsibilities of general management. And its intention is to position and relate the firm to its environment in a way it will ensure its continued success and make it secure from surprises. Now, there is a key word here that we see: relate the firm to its environment. Now, businesses operate in different environments, and some of them, these environments can be best analyzed and best described by the PESTEL model. The PESTEL model is the political, economical, technological, social, legal aspects. So that is our environment. So Ansoff says that the business to conduct strategic management is doing a strategic or systematic approach in trying to position the company firm in its environment, so that it's not just moved by the wind, but whatever might come around, they are prepared. So that is one thing. Now, there's another scholar called Rowe, who describes that strategic management, for it, is a decision process that aligns the organization's internal capacity with the opportunities and threats in the environment. So Rowe, in his definition, picks ideas from the SWOT analysis. And SWOT analysis is looking at SWOT in full is strength, weaknesses, opportunities, and threats. So he's saying that a match of strength and the strength, which is the internal capability here. When you match it with opportunities outside and the threats that the business may face, then you're clearly undertaking strategic management. So that is as per those two scholars. So it's very important for us to, of course, understand that businesses don't work in a vacuum, they work in an environment. And this environment keeps on changing. Like we've understood that we have the parameters of the environment, political, environmental, social, and so on. These different aspects of the environment keep on changing every day. Political, today we are in a political stability because maybe we just voted a new president. But a few years to come, we can't tell what will happen. Same thing with technology. Today we are running very well. The internet has taken over. Businesses are booming. But the future in terms of changes in technology, we cannot predict because we didn't know we will actually be here. So businesses have to be able to develop strategies that take into consideration, that prepare for aspects of complexity, turbulences, and uncertainties. Sometimes we call that a VUCA world. Okay, so that's very important, and that's why we see it's long term. It's not something that we are just trying to do for today. We want to look into the future, long term. What are our objectives? Where do we want to go? Like I earlier said, that organizations usually have visions, they have missions, but it's the strategy that connects of where they are and where they want to be. So long term is very key. And then when we are looking at strategy, of course, we look at both the aspects of qualitative and quantitative. And qualitative is quantitative here, speaking about in terms of numbers, financially, how do we get there? But qualitative also goes on to give us the detail of things that cannot be explained by the numbers. So there are major concerns that strategic management deals with, like we've understood from the definitions above, according to Ansoff, according to Rowell. Strategic management is concerned with two things, with these four things. One is matching the organization to its environment. The other is initiating with the environment. I believe this is clear since I've explained that. The other one is initiating and handling both incremental and transformational change. So businesses, if a business is starting today, we know of what we call the life cycle of the business. A business does not remain stagnant. Any business that is running will go through a transformation, and the transformation may come in terms of growth. Maybe it's expanding in terms of branches, or it's expanding in terms of customer reach. So strategies should be able to provide a way of how a business is initiating and handling this transformational change. And then the other one is managing the organization's relationship with stakeholders. Now, the word stakeholders are usually these individuals or entities that have interest to the organization. This could be shareholders, this could be investors, this could be government, this could be customers, these are suppliers, all those are stakeholders. And then the other is balancing the short and long-term consideration. So those are key concerns that we need to look at. So again, as you can see, we're saying strategic management is not only affected by the environment, okay, and resource availability, but also understanding the aspect of value and expectations by the stakeholders, people that have interest in the organization, okay, which here we are calling power as well. So that is very important. So understanding the different stakeholders, like earlier listed, the strategy needs to take into consideration. That's why even strategy will go ahead to include human resource policies. In terms of human resource strategies, what are we going to do with our staff? How are we going to motivate them, and other aspects? So after we've understood that, let's go on to understand the levels of strategy. So strategy can be implemented at different levels. And for organizations that are a bit larger, we see that there are different categories that we need to look at. Of course, you may find that if it's a bank, let's say Stanbic, that has different branches, may find that each of the branches is actually trying to it has its unique strategies given its locations. But then we have two scholars, Johnson and Scholes, that provide us with 3 levels of strategic management. Now, the first is the corporate strategy. The first is corporate strategy. And for these 2 scholars, here they are speaking about integration, okay? They are speaking about integration. So whatever businesses all the firm is in should be in and should basically be integrated within all, let's say if there are branches for a bank, we should have an integrated strategy. There should be a way of linking, even if these branches are in different places, there should be a way of how these can be merged, okay? And then we have the business strategy. With this, here we're now trying to look at, it's also called a competitive strategy. Here we're trying to look at the units, the business units. Like I hear, a strategic business unit could, for example, could be a branch, but could also be a subsidiary, or it could be an arm of the business. For example, if it's a company like, let's say, maybe Spear Motors that deals in vehicles and deals in number plates and then deals in real estate, those could be different strategic business units. So those might have different strategies. So the business strategy or competitive strategy is concerned with how these different business units are attempting to achieve the mission within the chosen area of activity. So this will go down to in terms of products, services, and how this can be developed to meet the market. Okay. And of course, not only just meeting the market in terms of the customer needs and wants, but also how that fits into the strategy of the business in terms of the objectives that the organization wants to achieve. So that's the business strategy. And now we have the functional strategy, operational strategy. Now this is the low level of strategy. Now this is more concerned with the functions of the organization. We know that organizations have departments, but this could also be called functions. So every function has its own strategy. If it's finance, if it's marketing, if it's production, they have their own strategies. Now, although we have the corporate strategy, these different functions also have their own strategies. And the function operational strategies should enable these functions to create harmonization between their strategy and achieving the competitive and the corporate strategy. So how do these functions contribute to the overall strategy? For example, if a company wants to lead at cost leadership, where they want to ensure that they are the ones that are incurring the lowest cost in production, finance will drive its agenda in terms of ensuring, for example, maybe they have a budget and they are regulating different departments not to go beyond the budget limits. Other departments like marketing will also look for cheaper ways of how to create brand awareness and marketing of the products, but strategies that are linked down to the strategy, let's say cost leadership. The same thing will happen with HR. Even when HR is hiring, their strategy is also trying to look at cost leadership. So they are also looking for resources that are much affordable but offer the right value. So that is how these three different levels of strategy, according to Johnson and Scholes, come into picture. So at least we can appreciate the different three levels of strategy, and you can be able to distinguish between the different three. Now, of course, for all the levels, of course, our goal is to, like we said, strategic management is looking at around how best can we use our resources effectively to achieve our goals and objectives as an organization. So for all the levels of strategy, yours is to understand that our key goal is to ensure that we are working towards the goal of achieving this overall strategy of the business, despite the respective distinctiveness. Okay. So now on the aspect of corporate and business strategy, we also want to look at the aspect of what we would call a strategic perspective. Now, a strategic perspective here, we're trying to look at the organization. How does the organization look at the environment? Okay. And how does it position itself to see that the impact of environment, it's affecting it in a positive way? Which means that in terms of the benefits, it's despite the turbulency and the changing environment, the business is able to position itself and respond accordingly to how the environment is changing. Okay, of course, for aspects of sustainability and the future. Of course, we understand that this is a continuous process and it's not the environment also keeps on changing. But the strategic perspective also requires that businesses create constant strategic thinking and acting. Okay. So for businesses, for them to gain this aspect of strategic perspective, it's required that we use and leverage on what we call frameworks and models. Okay, what we call frameworks and models. And these models, basically, they help the strategists, the top management that is involved in strategy, to see how to make the business respond in the right and proper way to the environment. okay? So the models help us to improve our awareness, understanding how the environment is. It also helps us identify our position as a business. Where do we stand within the environment? But then we are also able to do an analysis to understand what opportunities does this turbulence, the environment, bring to us as a business and the respective threats. So that is important. Now, for corporate strategy, we've understood corporate strategy, and we say that the corporate strategy is looking at the business as a whole, okay? As we saw the functional strategy and what we call the competitive strategy level, just right here. Competitive strategy or business strategy. We saw that the competitive or business strategy looks at the strategic business units, and then the other one of function looks at functions. Now, corporate strategy, we will say its focus is mainly on the overall. So for you to just broaden your understanding on corporate strategy, a corporate strategy is in itself is a set of policies adopted by senior management to guide the scope and direction of the entity, while taking into consideration the environment in which the entity operates. As simple as that. So we want to know that the organization wants to go in this direction. We want to be the leading manufacturer of beverages in Uganda. If that is what we want to attain in terms of our direction, what environment are we operating in? So whatever policies and procedures we put it together to guide our journey to becoming people of that caliber, in terms of business of that caliber, and taking into consideration the environment, then we regard that as our corporate strategy. Okay. So in terms of scope, when we are trying to look at the corporate strategy, like I said, here we're trying to look at the business at the top level. And if it's, let's say, global business, we are trying to look at objectives at the global level. And some of these objectives might include growth. And growth may also include, let's say, expansion, opening up new branches, new subsidiaries. May also include aspects of stability, where we choose as a business to run the way we are. We're not expanding. We are not retrenching. Retrenching is basically reducing in our operations. And then, of course, the general orientation to achieve each of either growth, stability, that should be defined within our corporate strategy. So again, our corporate strategy, we also need to understand, of course, like I said, it's overall and it's not confined to any area. And it requires us, of course, to plan strategically at the corporate level. Okay. So that is about corporate strategy. So we say that Johnson and Scholes are the ones that give us the different levels of strategy. They go on to say that corporate strategy is concerned with scope of the organization activities. It's basically concerned with, and it concentrates on an area of activity, one area of activity, or many. And the matching of these to organization's environment, its resource capabilities, and the values. Now, they go on to summarize the different aspects of the strategic decisions. This is according to Johnson and Scholes, where they say that the first they are looking at is determining the scope of organization activities. What is the business involved in? Is it involved in manufacturing? Through manufacturing, what does it do? And after it has manufactured, what does it do? It does warehousing, and it goes on to sell to the market. In selling, it serves individual customers and larger businesses and so on. Now, after we've identified those activities, like I said, we are developing a strategy that is not independent from the environment. We proceed to look at how the activities link to the environment in which we operate. And again, whenever you hear the word environment, think about the political environment, think about the social environment, think about the legal environment, and so on. What are the legal procedures in place? What is the political situation in place, and so on? And then the activities, once we've related them to the environment, it's very important for us to look at our resource capability. Now, resources could be money, could be machine. Here we're trying to look at equipments, could be men in terms of resources, human resources, and so on. So matching the activities, the resources is important within us when we're trying to do a corporate strategy. And then we now do allocation. And with allocation, we should ensure that we are doing an optimal allocation of our resources, allocation or reallocation. Now, the next is constraining and providing a framework for low-level operation decisions. Now, at the end of the day, we are developing this strategy at a higher level, but it's going to be implemented by people at a lower level. So it's very important that we provide a framework for lower level operation decisions. And that's where we go on to have an operations plan that links to the corporate strategy and other tools like budgets and so on that can be implemented on a day-to-day basis. And again, not only that, Johnson and Scholes also says that we should reflect on the values and expectations of the people in power within the organization. So stakeholders management is key when it comes to corporate strategy. We understand that there are different people who are interested in the organization, like earlier listed. So these are key according to Johnson and Scholes. And then determining now the long-term direction that the organization takes. As you can see, this is the last step that is taken by these respective people, according to them. So before you come to determining a long-term direction, you have taken time to understand all these different aspects. And after you've determined the long-term direction, now this is more of looking at what that will change. This is more of implementation now. How will your strategy be implemented within the organization? So it's important that we appreciate the expectations of the owners and stakeholders. Like we said, stakeholders management is key in developing strategy. Now, there's a scholar called Angetti who stresses that the key role or the sole purpose of any company that is set up to make profits is to make returns for its owners, who are the shareholders. Of course, they expect a dividend if it's shareholders that are ordinary shareholders. If it's, for example, they are preference shareholders, they also expect preferential rights. If it's let's say maybe they are, let's say, investors who have lent money to the company, they also expect good interest and so on. So basically, the return on investment has to be fair so that they can be able to take the business forward. So the same scholar, Angetti, points out that many stakeholder groups have different demands within the organization. And he says that with this kind of confusion, now one aspect that you also learn is that some of the different demands of the different stakeholders in the organization create an aspect of confusion. As say, shareholders are striving to make a return in terms of dividends, there are also internal stakeholders that are thinking about, let's say, keeping this amount of money that shareholders want to take in terms of dividends within the business so that they can be able to continue running and growing the company. So the shareholders, we said, are the key stakeholders. We also have the collateral stakeholders, okay? They basically benefit from the operation of the organization, but they do not have any right, like employees, okay? They are employees. They could be employees, but it could also be people from outside, like suppliers or banks and government. Now, these have different interests. Like interests could be employees want better pay, government wants to get a good tax, some workers are looking for job security, and so on. And then we have our shareholders whom we've said their interest is the best return. That's why you see for organization, there are organizations that have laid off staff in the last periods. For example, Cheaper Cash, Wave, and different organizations that have laid off, continuous laid off staff. Why? Because they want to ensure that the bottom line is in benefit of the shareholders. So there's need for balance to reduce on the that Angetti calls confusion. So there's a concept of added value here. Now, the concept of added value is mainly concerned with the aspect of organizations usually have what we call inputs. And these are the resources that we talked about, or what other people might call factors of production. The machine, the human resource, okay, the materials, and so on. So combining these and being able to add value to come up with a product out of it is looked at as adding value. Now, at the end of the day, businesses sell value. If you're buying, let's say, a bottle of water, you're buying that bottle of water because they have added value to it. And that is what they do. So for businesses to compete effectively, they have to ensure that they're providing value at a competitive price. And that means that when you compare with the competitors, the business stands out, okay? So in attaining value creation, we have 3 key elements, and these are specifically according to the different levels of strategy as earlier seen. So we understood that the business and competitive strategy directly is around how the different strategic business units can be able to create strategies that make them competitive. Okay, so for us to have a strategy that competes very well, then we have to ensure that we are developing products that meet the customer needs. Okay, but again, at the end, we say that as we do this, the objectives of the company have to be kept in mind. So as we saw, corporate strategy looks at the organization as a whole. We agree that this strategy is looking at the unit, strategic business unit. And I gave you an example of Spear Motors that has different business units: real estate, the number plate business, Tampeco, and now the business of cars and the business of repairs of motor vehicles. So these are called business units, okay? So in terms of business unit, we have different definitions, as you can see there. This could be a business unit. It has a distinctive business mission, especially if it exists for a different purpose. Like the examples I've given you. Offers a well-defined product or services in a well-defined market. So totally, it's not, if it's, for example, Coca-Cola, water might be a business unit. The business of water, the Renzoli, is a business unit. Although it's the same company, but it's a business unit on its own, okay? And so on. So these are just definitions to give you a better understanding of what strategic business unit may look like. So in relation to accounting, you can refer a business unit to what we call a profit center. A profit center is a unit within the business that handles revenue and expenses. Basically, it has its set of revenue that is distinct from the overall business, and it also has its expenses, okay? So it's a unit that is specifically generating profits for the business, okay? Sometimes for some organizations, this could also be investment centers. And if it is an investment center, means it's beyond profit. It's a profit center, but in addition, it's given the autonomy to make investments on behalf of the organization, okay? So that is very important. Now, what then does it mean when we say competition within the market? Or what you could call market competition. Now, as an organization, we say that strategy is, we're trying to look at the organization, where it wants to go, the environment, but then we also want to ensure that we are competing within the environment. So the products that the organization produces need to compete with, again, the products that are produced by other competitors, okay? But then one, again, may argue that the products, okay, not the organization produces, we might have products for different business units, okay? We have, we have different units, but we need to ensure that each of the products is competitive. If you're dealing in, for example, it's let's say MTN now has a mobile money business, and a different dependent business unit. But there could be also another unit that deals in internet, and then there's a unit that deals in calls and messages and so on. So we need to ensure that the different units are competitive in nature. Okay. Now, when it comes to the individual business units, it's also very good to appreciate that at this level, in terms of the strategic issues, are around the coordination of the different operating units, and more of how can we develop these products to be more competitive in the market. So at this, in terms of this phase of market competition, our strategy is looking at three things. One, positioning the business against rivals, the competitors. The other is trying to look into the future and see how will demand change and technology, and how can we adjust our strategy to cater for any changes. And then the other is influencing the nature of competition through strategic actions. Some of these could be either taking over our competitors through vertical integrations, or what we call political actions that could be through lobbying. And all these are intended for our strategies around competition. Okay. So we've tried to appreciate the different levels of strategy and trying to go through the different in detail what each of these. So it's good for you to know that strategic management has the different levels, and at this level you can be able to understand what exactly each of the different levels do entail. So let's look at the importance of strategic management. Okay, let's look at the importance of strategic management. Now, before strategic management, as we've tried to understand trying to look at the direction, it's also good for us to appreciate what strategy is. Okay. So in simple terms, strategy refers to a pattern, or a framework, a pattern of activities that seek to achieve the objectives of the organization and adopt its scope, resources, and operations to environmental changes in the long term. My keywords here are the objectives of the organization, and then adopting to the environment, and then the other is long term. Strategies are usually long term, looking at the objectives of the organization and taking into consideration the environment. Okay, so that is strategy. Now, there's a scholar called Peter Drucker. To him, he sees strategy as positioning the organization for the future. And he looks at it as deciding what should be done other than of how it should be done. I want you to appreciate the fact that senior management, the people at the strategic level, provide the aspect of what should be done. But then in terms of the operations team is the one that goes down to say, okay, so how are we going to do this? we want to get here, but how are we going to do this? Okay. So strategy, of course, requires us to take different choices. Of course, we have there are different strategies outside there. So businesses have to make a choice on what will work for them. So we have, again, another scholar who is called Henry Mintzberg, who again gives us also a definition of the strategy using what we call the 5 Ps. So his first idea is that strategy is a plan. His first idea is that strategy, it's a plan. Basically, what we can be able to follow, a plan, laying a plan, preparation. And then it looks at strategy as what we call a ploy. And here he's saying a strategy as a ploy, which can be seen as a move in a competitive business game. Gives an example here. For example, a farm might want to add on its plant capacity. Like I give an example of Coca-Cola. And its intention is not produce the goods, but it's trying to discourage the competitor who is entering in the market. So it's more of a deterrence of the other competitor to feel weak from entering the market. The other that Henry Mintzberg also looks at, strategy looks at it as a pattern. And by pattern means that it's a consistent behavior, giving the impression of a logical, thought out strategy. Now, here is Mintzberg is understanding that strategy is not a one way of thing. You don't prepare a strategy and that is all. He's looking at it as a consistent behavior, which can help the organization achieve its intended results. And then the other is looking at strategy as a position. The fourth P that Mintzberg is looking at is position. Position is looking at aspects of how is the organization placed within the environment. Okay? How is the organization involved within the environment? And the environment, think about the pestle model, but being placed in the environment, here Hofer and Skendel looks at it from the perspective of, let's look at from perspective of what our strengths, what our basically internal capacity, what our internal strengths. And our internal strength is encompassed by our resources, what we have, what we own, and maybe the skills of our talent, our employees, and then linking that into the opportunities that are outside. So that is the aspect of position. And then lastly is perspective. Henry Mintzberg also looks at strategy as a perspective, which says consists of not just a chosen position, but also a unique way of perceiving the world. So he goes on to suggest that the organization strategy is more of individual's personality. basically saying that every organization is unique in its own. Okay? Every organization is unique in its own. Now, I believe that you understand this now, the plan, ploy, pattern, position, perspectives, and so on. And you can be able to know that one does not exist alone. All these are what we call mutually exclusive. They work together and they complement each other accordingly. Okay, so we've understood this strategic, this aspect of strategy. It's also important to understand strategic thinking. What does somebody mean when say strategic thinking? If we know that the strategy looking at the long term and our organization is positioning itself in the environment to achieve its long-term goals and objectives. Strategic thinking is basically a thought process. It's a thought process of asking and trying to reflect on what best way an organization is going to achieve its intended objectives. So strategic thinking may involve what we call flexible thinking, where an organization, through its strategy formulation, is asking itself what if questions. What if the products we are running today are no longer needed in the market? What if a new competitor comes to the market? What if we face these challenges as a business? What shall happen? Now, this strategic thinking, since we are developing our strategies, helps us to foresee what might come in the future. Remember, we are looking at long term and we've not been into the future. So the strategic thinking helps us to look into the future. And then the other is avoiding the wrongful focus precision and keeping details in perspective, especially here uncertain details, and also focusing on key factors and essentials. Basically, we're trying to look at the key competencies of the business. Now, we have another scholar who is called Ohame, who goes on to say that successful strategists have what we call an idiosyncratic mode of thinking. And this thinking is in regards to in which the company, customers, and competitive are able to be merged in a dynamic interaction, out of which the objectives and the plans are able to arise. Now, of course, we understand that the overall goal of the strategy is to help the organization get to its direction despite the environment. Now, Ohame suggests different ways of how businesses can strategically think, and says, one, we should ask the right questions. Like I said, what if questions, what will happen? Ask the right question. Now it says to ask the right question, of course, we have to observe the problem. And here also we are looking at observing the opportunities. And then goes on to say that the process of obstruction is also carried out by various techniques. And some of these techniques could be brainstorming, for example, where the organization brings together different people within a room and able to bring ideas in regards to where the organization wants to go. Then the other one is the aspect of, it says that the strategic thinker should be able to consider an ideal state of affairs. An ideal state of affairs is looking at things going on well. And it says that the key reason for this is to ensure that any impediments or constraints that might be seen in regards to achieving the vision are more looked at as surmountable obstacles rather than natural laws of business. Basically, they're obstacles that can actually be overcome, rather than saying that these are actually cannot be managed. So this same scholar also gives us 4 routes to strategic advantage, what businesses can basically do to see that they are positioned well. It says strategy based on the organization's key factors is one of them. And key factors for success, these are key in enabling the organization increase its market share and profitability. Then it also says strategy that is based on exploiting any relative superiority. Like, what are the key areas the business is better than its competitors? So being able to leverage and exploit those is one of the things that Ohami here provides. And then goes on to say strategy based on aggressive initiatives, which challenge the accepted assumptions, okay? And then strategy that is based on the development of innovations. Taking into consideration that the environment keeps on evolving, Ohami is saying here that as part of the 4 route strategic advantage, there should be an aspect of strategy based on development of innovations. And here innovations, we are trying to look at new markets. For example, a new market being thought about, maybe already you're serving a few markets and you want to innovatively come up with a new market or a new product in place. So that is according to Ohami. So in terms of strategic planning, and more specifically corporate planning, here corporate planning is around management's attention to the long term. But again, it should not exclude the short-term considerations. Like we said, the strategy, the long term should be in harmonization with the day-to-day, the short term. Now, as we understand that sometimes it's tough for managers to see forward, strategic planning helps us in trying to manage this challenge. Now, the other benefits of a strategic planning, when they're saying it demands logical, deliberate, and analytical approach to decision making. It basically helps us to identify the risks that are ahead and what we can be able to mitigate before we actually get there. Okay, so this is important. It also helps us to create an environment, a climate conducive for creative thinking, initiative, and innovation. The other one is helping us in determining or formulating what we call the organization goals and objectives, and ensuring that these objectives are achievable and they are not independent of our environment. They are in line with the environment that the business operates in. Then the other is that as we continue what we call the SMART survey of the environment that we do when we are doing the strategic planning, can help us improve the basis on which the information is gotten, but as well as to understand how the trends, how our projections as a business can be made strategic in nature, and how we can be able to evaluate ourselves when that time comes. Then it also helps us in quantifying how much our long-term resources will take in terms of the long-term resource problems and how we can be able to plan in the future before we actually get there. Then strategic planning also is key in helping us create a harmonization between our long-term, medium, and short-term plans to ensure that whatever the business is doing on a day-to-day basis is in relation to where we want to go. Now, under strategic management, we want to look at the process, context, and the content. Now, as we develop a strategy, it's very important that we understand the needs that might be drawn from process, context, and content as we do the strategy formulation. So context, when you hear the word context, is looking at the environment in which we operate. Content here is looking at the issues basically in terms of what are our goals, what are our goals in terms of corporate, either corporate, business, or functional. All that forms content. The issues, the substantive issues that we want to tackle within our strategy at the different levels. Now, process is the method of how we drive our strategies and how these can be able to be interlinked with the other factors. For example, the environment, the aspect of risk, strategic thinking, planning, and implementation and control. So this is how the different aspects, process, content, and context are looked at. So after we've looked at those context, process, and context, it's very good for us to look at the present position of the organization. Remember, we say that one of the key things is that before the organization even does strategic planning, it's very important that the organization understands its position in the market. And this understanding the position of the business in the market or the organization could involve aspects of, for example, self-analysis, where, for example, an organization conducts a SWOT analysis to identify its strengths, to identify its weaknesses within itself. It's basically an analysis internally, but then can also look at the external. And here we're trying to look at the opportunities and the threats and so on, which are usually provided by the environment in which it operates. So the self-analysis goes on to look at the different areas, of course, at corporate level, at strategic, at the strategic business unit, which is what we call the business or competitive strategy, and then maybe also at the operations level. So when we are doing the analysis, other than the self-analysis, we could also look at the performance analysis, looking at how much are we making as a business in terms of profitability and sales. How much is our return on assets? Now here, performance analysis, you can even go ahead to do ratio analysis from the accountant's perspective. You're just trying to basically see how are you performing as a business, okay? Take into consideration how much money comes in, what is the return on assets, and so on. Then we have the shareholder value analysis, okay? We have the shareholder value analysis. Still in determining the position, remember, we compete for capital from our shareholders. Think of a listed company like MTN that is listed with other companies like Cipla, like Nation Media, and so on. They compete for capital. So it's very good for them to look at how are they giving value to their shareholders, the shareholder value analysis. And here we're trying to look at the return to our shareholders, because shareholders invest money within the business and they expect a return. So being able to look at in terms of cash flow, because cash flow influences our decisions around giving dividends, say, to our shareholders, and so on. Now, we also have other non-financial performance measures. And here is customer satisfaction, brand loyalty, association, how we relate with our customers, aspects of relative costs. Here we're trying to look at how much we spend on, let's say, raw materials, wages, and so on. Then the new product activity. Here we're trying to look at to what extent do we deploy innovation to come up with new products and improvements. Then we can also look at the employee relationship, how the business is basically relating with employees, maybe aspects of the labor turnover, and so on. So those are key areas to look at. And here we're trying to look at our so-called strategy. And this is just an introduction to dig into what you need to know, especially when it comes to the strategic management process. Okay. Don't know if we have any questions so far. for those that are following this online. Do we have any questions?
My question is about the notes. How are we going to get the notes?
Okay, I'm going to share with you these notes. I'll share with you. I'll put them on via WhatsApp, but I can also be able to share these through email, just in case we need to. It should be through email, but I'll be able to share these with you so that you can do more reading and more understanding of these concepts, and also try to appreciate how these link to how businesses run and how they formulate their strategy. Yeah.
Okay.
All right. Thank you.
Okay.
So so it's very important that we appreciate the aspect of strategy management and understanding that we don't just wake up and come up with a strategy, but there are different things that we do look at as a business to see that whatever strategy we come up with, it is a strategy that will help the business to get to the next level. It's a representation of what the business exactly is moving to. So that's why it's important for us to look at aspects of strategic, understanding our position as a business, understanding our environment, and so on. We'll be able to look at these different other areas of environmental analysis. As you can see here, the strategic planning framework which you've been looking at, one of the other areas is the evaluation of the internal and external organization environment. And I say that we have different models, and one of the most common models is the pastel model. So as we're going to be using the word environment often in our study, and whenever you hear the word environment, yours is to understand that we are trying to mean aspects to do with environment, the political environment, the social environment, and so on. So I'll be able to provide you with notes that can give you a more understanding of these concepts. Like I encourage you,